Hello and welcome. In this video, we will look at a new report just released by the silver industry on investment demand. The results of the report may be a bit controversial, to say the least. Let's take a look at the report and read some key components. A word of warning. Be very careful of people that sell bullion or make YouTube videos that suggest one should not trust the silver industry's own report. The Silver Institute is run by the largest silver miners in the world. The largest silver producers in the world can count their own product better than people that make YouTube videos or sell bullion. If you find the information in the silver industry's own report flies in the face of much of the information that you have been told about so-called shortages, defaults, and manipulation, then I strongly suggest that you stop listening to the people giving you that information. Again, the Silver Institute is run by the largest silver miners in the world. If you doubt the silver industry's own report, then you are assuming one of three things. The silver industry is unable to count its own product. The silver industry is lying about its product so that they will lose money. People that make YouTube videos and people that sell bullion know more about the silver industry than the industry knows about itself. Let's start with inventories, as there has been a lot of information on this subject reported lately. From the report, quote, "There is a very large amount of silver held in reported and unreported inventories in the market. There also is a large amount of newly refined silver from miners and scrap recyclers slated to enter the market in the next few years. The silver market is expected to be well supplied over the next few years. Given likely market trends, the silver market could see reduced amounts of silver surpluses over the next couple of years, then increasing supply flows beyond 2016, unquote. This is a graph of the yearly supply of silver. The supply of silver, including the supply from mining, has increased every year. Furthermore, first half production reports show that production in 2014 has again increased to an all-time world record high. Registered silver inventories on the COMEX have been increasing for 3 years straight and are at 5-year high levels. The silver industry is telling and showing you that there is an excess of silver supply in unreported inventories and that the market will have a surplus of silver over the next few years. Summarizing the section on investment demand, the report states, quote, "The extent to which investors will be buying silver will determine the direction of future silver prices. The intensity of investor demand for silver will depend on how investors view the world around them. Investors could buy less silver in the coming few years if global economic growth is much weaker than previously expected and inflation remains low in major economies. That is not to say that investors would sharply reduce their silver purchases, but there could be a reduction in net purchases. More likely, however, in a weak economic growth scenario, it is likely that some investors would pick up more silver as a safe haven asset for fears of growing risks in the global economic, financial, and economic imbalances. In this environment, investors may begin to increase their net silver purchases in the years ahead. Current trends suggest investors may accumulate as much as 1 billion ounces of silver over the next decade. This would be expected to push annual average silver prices to a fresh record high further out in the horizon," unquote. On coin demand, the report states, quote, "Some coin investors will only buy during rising price environments, while others only buy when prices are declining and they perceive silver's value as a bargain opportunity. This means that coin demand is not necessarily a key determinant of prices, nor that silver coin demand always directly correlates to changes in silver prices. Because of how large a portion coin demand occupies of total investment demand, it sometimes can act as a buffer in years when there are large annual surpluses not being purchased by bullion investors. In this type of environment, coin demand can provide some support to prices on the downside. This was particularly the case during 2013. While other investors in bullion bars and ETPs were selling silver, global demand for silver coins rose to a record high 136 million ounces during the year," unquote. That part pretty much speaks for itself. However, there was an interesting fact in the report worth mentioning. Quote, "Another interesting development emerged in 2013. For various reasons, some wealthy investors were exchanging their silver bars and ETF positions for boxes of silver coins," unquote. On inflation, the report states, quote, Silver is regarded as an inflation hedge. Comparing increases in silver prices and increases in U.S. inflation historically, silver has acted as a hedge against inflation during certain periods, but has not performed well as a hedge against inflation during other times. Silver was an exceptional inflation hedge during periods including 1972 to 1974, 1976 to 1980, 2002 to 2013, when the U.S. inflation is moderate or high, and silver prices have generally kept pace with or exceeded the increase in inflation. There are also periods when the price of silver has not kept pace with inflation or has declined during a period of economic inflation, and silver is considered a poor hedge against inflation in that period. Such periods include 1986 to 1990 and 1998 to 2000. Buying silver on the grounds of hedging against inflation is expected to have little influence on silver investment demand, at least over the next couple of years." Unquote. That part also pretty much speaks for itself. There are some interesting comments in the report regarding futures contracts and delivery. Quote, "It is a misperception that investors in futures care to stand for delivery. While some do, roughly 99% of the investors who buy silver futures or options do not take delivery and are not interested in doing so. They simply want the exposure to silver price changes." Unquote. The silver industry is telling you that the COMEX and Shanghai exchanges are not going to default. And finally, quote, "An often misunderstood fact about the silver market is that, contrary to what conspiracy theorists like to believe, big banks and investment firms have little to no interest in artificially driving silver prices up or down." Unquote. Again, this report comes right from the silver industry. Who are you going to believe? Thanks for watching.